Welcome back to One Up Wall Street. I'm Sam, and thank you guys so much for joining me in this video. Today, we're going to be talking about Tesla. We're going to go over their earnings, talk about some struggles still ahead, and then lay out a bull and a bear case for Tesla. If this is your first video, welcome and thank you for joining. And if it's not, thank you so much for watching my videos in the past. Let's get into it. All right, diving right into Tesla's quarter one earnings statement. So this is their investor presentation that you can find directly on their website by looking up Tesla Investor Relations and then downloading the slide deck from there. On this front page, we see some metrics about profitability, cash, operations, and then a little bit of a summary about Tesla's operations and performance during this quarter. We're going to talk a lot about these financials and numbers down below in just a second, but I do want to address GAAP versus non-GAAP that you see here. GAAP stands for Generally Accepted Accounting Principles and are the standard accounting principles companies must follow and report. And in the event they get audited by either the IRS or when they have independent auditors come in, they are concerned with the GAAP measurements. Whereas non-GAAP are typically custom to the company, and it helps paint a better financial picture about what's actually happening within the company most of the time. One of the greatest examples of that is just in cash flow. So you have cash flow from operations, which is a GAAP standard. And you can see that here, Tesla earned $2.2 billion in their cash flow from operations. Free cash flow is a non-GAAP standard. And what it does is it takes the total operating cash flow and then subtracts the capital expenditures from it. So the capital expenditures is just the amount of money that the company is willing to reinvest into itself. So you can see here that they started out with $2.2 billion of cash flow from operations, and their free cash flow was $0.7 billion or $700 million. So from that, we can see that they put roughly about $1.5 billion worth of cash from their operations back into themselves. So investing that back into the company. So that's the biggest difference between those two. And you'll see in the future statements that they're measured in both GAAP and non-GAAP. So diving right into that, there's a lot to talk about here. Up in this first section, we have total revenue from each of their departments. They have automotive, energy, and services. We can see that energy and services were up 67% and 15% respectively from the previous year, again, quarter one of 2024, while the automotive revenue was down 20% from last year. Now, looking at it quarter to quarter, we can see that all of these metrics are also down from the previous quarter. So as a whole, we see that Tesla did worse than they did both last year and just last quarter. Despite these higher numbers, we can see that they still lost money compared to last quarter. And so that drives a lot of these values that we're seeing down here in the revenue section, the total revenue. We see that total revenue, they brought in $19.3 billion this quarter, which was down 9% from what they got last year, same quarter last year. But then also looking at just last quarter, we see they had $25.7 billion compared to just $19.3 this quarter. So they lost over $6 billion in just one quarter from their revenue. And a lot of that is coming from their automotive revenue. We also see that their gross margins, while they remain consistent from the previous quarter, they're down about 100 basis points from previous year, okay? Next, moving into their operating expenses and their income from operations, we see that their income from operations was down 66% this quarter. They were making 66%, mind you, from this $1.1 billion number right here. It's down even more from just last quarter. It's down over 66% from just last quarter. You can see last quarter, they brought in income from operations of $1.5 billion compared to a mere $400 million this quarter. That is a substantial loss. And we can see that their operating margin dropped substantially. Again, it dropped 343 basis points from last year at this time, and even more than that when looking at just this past quarter. So then moving down here, EPS or earnings per share, we can see both GAAP and non-GAAP measurements here for diluted shares. Now, if you don't know what that means, put a comment down below and I'll make sure to put out a video on EPS and how all of this is calculated, all right? But looking at their GAAP measurements for their EPS or earnings per share, we see that it was down 71% from the previous year and even higher than that from just last quarter. And we see the same thing for the non-GAAP measurements. We see that they were down 40% from last year, and again, over 50% from just last quarter. Those are staggering losses in EPS, in their earnings per share. And that's going to have a huge impact on the stock as a whole. So now the last thing on this page that I want to talk about is their capital expenditures. Again, up above, we said that they spent about $1.5 billion on themselves, and that's how we arrived at that free cash flow number. You can see that's pretty much what we have here, $1.49 billion, okay? Now this went down, and I want to spend a second to talk about how this is both a good and a bad thing. So capital expenditure going down means that the company spent or invested less capital in themselves this year and this quarter. Now, that can be attributed to a couple of reasons. One, they were revamping their Model Y this year, in previous years. And that took a lot of capital in order to design it, engineer it, and then change their manufacturing lines. And that's why we see, especially like in Q3 of last year, we see such a high number for CapEx. Now, they completed that, so some of this is potentially just them not needing it anymore. So they didn't need to put that money back into themselves. And that's a good thing, you know. But the bad part about this is that typically we like to see companies investing in themselves, okay? One of the reasons that they might be cutting back on capital expenditures is to try and offset some losses that they see in other departments, like we see here with Tesla, right? They're able to attribute less of this money here, and so they're able to grow their free cash flow, right? Which goes into this next line, cash and cash equivalents. So that can be seen as a negative if they're doing it specifically to try and offset losses from that quarter, which, based on some of the numbers that we saw, could be the case. We don't know exactly why they stopped, and we probably will never know, but there's both a good and a bad side to seeing this. So then the last thing I want to talk about is the cash and cash equivalents. This is basically any cash that they have on hand that they can immediately access. So whether that's physical cash in a bank, whether that's short-term bonds, short-term investments, things of that nature, things that they can immediately access. You see they have just under $37 billion worth of cash, which is a staggering amount. Great to see a company with such high cash balance on their sheets, okay? And basically what that means is that in the event some uncertainty comes, like tariffs, right, like regulations, market sentiment, things like that, they can still cover the necessary expenses to operate their business and make it through those tough times where they're seeing lower revenue, right? They can pay off their debt. They're not going to default on their debt. They're able to pay employees. They're able to continue to support their facilities. And so that's a great thing to see such a high amount of cash and cash equivalents, all right? So moving down here, these are just some of the reasons why their revenue went down. We'll see a little bit more of that in the table below, but I did want to talk about these 2 points, which are the lowest costs associated with producing vehicles, right? This is a major benefit for Tesla and for consumers, right? If they're able to lower their operating expenses by producing these vehicles at a lower cost, that will help their bottom line, especially when we see lower revenues like we did in this quarter. Additionally, if you're looking at buying a Tesla, this could potentially increase demand as people are comparing these EVs with other EVs out there from Ford, Toyota, Subaru, and they're seeing that these costs are much more comparable now to some of these other models. So this could drive demand up for Tesla as more people are willing to purchase their vehicles at a lower cost. So moving in, last thing I want to show you on this page, we can see here they were down in almost every aspect of their operation. They were down in their production, they were down in their deliveries, their inventory, they were down almost everywhere. And that really is what contributed a lot to their losses this quarter. Now down here at the bottom, some of the only growth that they had was in their supercharger stations and their supercharger connectors. This is big for Tesla and big for the EV community as a whole. One of the biggest factors that cause people to not purchase EVs is the lack of chargers in their area, right? But if these can continually grow, then Tesla is basically making the market bigger and bigger for its own product, right? As more and more people see that they're able to charge their vehicles nearby, they're more and more likely to purchase them. So then that, coupled with the lower costs of these vehicles, we could see demand start to increase for Tesla as time goes on. So now the last thing I want to point out here, we had talked about their cash on hand, and we can see here this number of $5.2 billion is their current outstanding debt and finance leases, okay? We can see it's gone down actually from the previous quarter. It's obviously up from the previous year, but they have $37 billion on hand right now in cash and cash equivalents and only $5.2 billion in debt. So if they needed to, they could easily pay off all of that debt right now and still have a substantial amount of cash left over, right? So this is a great value that we like to see. Their balance sheet as a whole looks good. It was just their earnings that were pretty bad this quarter, okay? We see that their debt is good, their assets and liabilities are good, even though we're not going to dig into those today, but their balance sheet as a whole is good. So that wraps up the discussion about their quarter one earnings. Let's talk about Elon Musk next. Being a new channel, I only get 15 minutes per video with you all. So I'm going to make this last part a little quick. We're going to talk about Elon, the bull and the bear case for Tesla, and then my overall view on Tesla stock. So the bull and the bear case for Tesla go hand in hand with what's happening with Elon right now. Tesla has two major challenges right now. First being Elon and the second being innovation. Elon has created a poor reputation for himself by being part of the Trump administration and some of the things he's been doing as part of Doge. And indirectly, that's been impacting Tesla's reputation. We've seen protests across the country against Elon and Trump, but they're also spreading out to protesting against Tesla. They're protesting at dealerships, manufacturing plants, and they're even vandalizing just normal cars on the street. And that really goes to show the public sentiment toward Tesla. Now that, coupled with the earnings report that we just saw come out from Tesla, we can see that demand is just way down for these cars, and that's what's impacting their revenue. And again, this all leads back to public sentiment and the perception of Tesla. And that's really Tesla's biggest problem right now is its brand. It's still tied to Elon Musk, and they need to fix that brand. Now, the biggest thing that can happen right now for Tesla is if Elon leaves. That would be the best, is if Elon leaves and focuses solely on politics and solely on X and SpaceX and leaves Tesla alone. They would be able to get a new CEO, and they'd be able to focus on the incredible things about the company that they already have, like lowering the costs to manufacture these cars, their incredible balance sheet, and hopefully putting some of that excess cash on hand that they have back into the company so that they can continue innovating, right? That's something else that they've fallen short on right now is innovation. Back when they first started, innovation was at an all-time high, and they were producing incredible products, brand new cars, self-driving technology, and everybody loved Tesla. They need to get back to that. And the best way to do that is for Elon to leave Tesla. If that happens, I think we have a great bull case for Tesla. Now, if he stays and or Tesla doesn't continue to innovate, I think we still see some struggles ahead for Tesla, and I'll show you why. After this most recent market crash, right, Tesla dropped over 50%. And we see that even after that drop, their PE is still at 116. And we see today that during the day, they were up 4.6%. And then even after they released their earnings, they were up over 5%. That just makes this PE way too high for somebody like myself to purchase. With the uncertainty ahead for Tesla, we don't know what Elon's going to do. We don't know how innovative the company's going to be. We don't know if they're going to be able to turn around this public sentiment and get their numbers back on track. It's not worth paying 116 times their earnings for this type of company. So a lot of this really is in the hands of Elon. A lot of it is in the hands of what he decides to do in terms of his political career and his public company career. So that's what we really need to focus on here. And for me right now, this stock is a hold. I cannot purchase this stock. If you currently have it, I don't know that I'd sell it yet, but it's not worth buying this stock for me. So thank you guys so much for listening. Let me know down below in the comments what you think about Tesla, about Elon. Are you purchasing Tesla today at this price? Let me know down in the comments, and I'll see you guys in the next video.